Assalamualaikum warahmatullah. Guys, we come to the second measure of capital, that is the market value of capital. Earlier, we were looking at the book value of capital, which is the difference between asset and liabilities. So assets are loans and cash and securities. Liabilities are the CASA account, fixed deposit, money market account and money market funds, and any funds that the bank acquire by way of issuing sukuk, tier 2 capital. So these are liabilities. And when we subtract liabilities from the asset, then we can get banking capital. So that banking capital is equity, so it will go up and down based on banking performance. So asset will generate revenues, whereas liabilities will generate costs. And we have other costs like operating expenditure and loan loss provision. So all of these expenses, will define how much earning, would be acquired from the operation. So if these earnings are positive earning, so that will increase banking capital. So if the bank suffer losses, we have negative earning. So that losses will have to be written off from capital, and then you can see that there is a decline in capital. So capital is based on profit loss sharing. So there is no guarantee that capital will increase, like what we see in the riba contract, where capital will increase based on agreement upfront. So one example, we can see that in banking capital, in the table on the left here, you can see that for Malaysian bank, Maybank, total equity capital is 86 billion ringgit, followed by CMB and so on. So we can see that this is the equity capital that will move up and down, based on the performance of the bank, based on banking earning. The other measure of capital is called market capitalization, or the market value of capital. And that would be the current price of the share capital multiplied by the total outstanding share. So this measure of capital is mostly associated with the capital market, because in the interpretation and the analysis of the banking company will always be based on the performance of the banking stocks in the stock market. So if the bank is a listed company, then the performance of the bank will be seen, from the stock prices. For example, here we can see Maybank price per share is 8 ringgit 0.58. Public Bank is 3.78 ringgit. CMB is 481. And so on. And we can see that the price of this banking stock are not fixed. They are not guaranteed. So the market value of banking stocks is not guaranteed, as the price of banking stocks is determined by demand and supply. So the demand for stocks is mainly influenced by earning, by banking performance, such as bank earning, growth, and risk. So the market value of the stock is based on buy and sell transaction. For example, when more people buy stocks than those selling the stocks, then the stock price will go up. So in contrast, for example, systemic bad panic selling will drive down stock prices drastically, that can even crash the stock market. So here investors can enter and exit the stock market at will. The stocks are considered as wealth or property al-mal, thus can be traded based on the contract of sale. So from one point of view, when we look at the book value of capital, we see that the banking capital is driven by the PLS, so meaning that there is accumulation of capital, by virtue of the investment of the shareholder. But then the performance of the banking capital is not based on the demand and supply of the banking stock, but it is driven by the balance sheet, how well the bank is able to make loans or make murabaha, and how does the bank control risk in doing so. So risk management is very important in ensuring that revenues are generated, cost of funds are minimized, operating expenditure are under control, and the loan loss provision, are accurately measured or forecasted to ensure that there is enough provision made. So if the provision are underestimated, then suddenly there is a big default that was not forecasted before, and that may cause a loss to the bank, and that will cause banking capital to contract. So these are within the balance sheet perspective, whereas when we look at the market value of capital, that is not beyond the control of the bank, because that would be based on the demand and supply of shares in the stock market. So the book value of capital is something that the bank can control, based on their risk appetite and their risk management capabilities, whereas the market value of capital is beyond the control of the banking organization, and that will be driven by the stock market. But for both book value of capital and market value of capital, we are looking at the fact that both value of capital is driven by the profit and loss sharing system, and it is not based on riba base or based on credit financing or deferred financing or debt financing. It is based by the profit and loss sharing financing. So it is very important for the academia or any of the researcher to make a proper claim about PLS, that if they observe that the bank is profitable, that the bank is efficient, that the bank is stable under shocks, then if they were to use the PLS as the reason for that observation, then they need to be a bit more discreet and thorough to point out which component of the banking operation that PLS has part in their findings, whether the PLS is coming from the funding side or is it coming from the asset side, whether they're coming from the capital side. So let us be a bit more responsible in the storytelling and not just providing a blanket view of the PLS to take, for example, to see that to show that some of our weak oversight on the current happening in the Islamic banking, where it is now being heavily driven by debt financing. But then when we are telling good stories about Islamic banking, then the PLS were used, to justify why we have such a good perspective of Islamic banking. So let us be a bit more discreet and responsible in our storytelling, inshallah, because we need to be honest and we need to have integrity whenever we are reporting, as well as telling or justifying our findings in our respective research. Guys, thank you very much. I'll see you again. Assalamualaikum warahmatullah.